We're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist over at Standard Bank. Thanks so much, Shireen, for joining us this morning. Well, optimism back to renewed caution. That seems to be the kind of scenario we see on a day-to-day basis. It never ends. And with that, we're entering a scenario right now where investors are seeking safety in the dollar once again. How are you managing to keep up with the kind of bouts and turns we're seeing on the markets right now?
Well, Alishia, that's quite a difficult one. We are seeing the rand going to and fro from weakness to strength. And yesterday we saw that that rand really strengthened quite a bit to close to a 3-week high. We had optimism from Italy with regards to their austerity measures, as well as news from France and Germany that they had reached an agreement on a new package of measures to try and rescue the Eurozone, and that really kept market sentiment fairly positive. And not even the disappointing data out of the Eurozone and the US with regards to sentiment indicators really managed to derail the currency. But this morning we did see some reports coming out of the international economy with the S&P rating agency downgrading 15 of the 17 Eurozone member countries, downgrading it to a negative outlook, and that really soured sentiment somewhat. We did see commodity prices come off, and Asian markets were also in the red this morning. So we are expecting the rand to really have some kind of corrective bout of weakness coming through today, but we do see an appreciation towards the end of the year. So it's really an up and down movement that we're seeing, and we really do have to manage it quite carefully.
All really being directed by what plays out in the euro. I mean, we've got the euro currency having eased its hit to that 133 mark this morning and steadily slipping back from that peak of about 134.86, which was hit yesterday. We've still got, though, traders reluctant to sell the euro down too far at the start of this week, just because of all that's still to come out of the Eurozone in terms of meetings and agreements. What's your position on the euro?
Well, the move back towards those levels that you mentioned is very warranted, and the fact that traders are reluctant to sell that euro on the back of the fact that, as you mentioned, we have the EU summit coming towards the end of this week, and the very important ECB meeting on Thursday this week, with indications coming from markets that they could possibly cut the interest rate as well. And then today there's also GDP data coming out of the Eurozone for the third quarter. So there's quite a bit of data that could steer sentiment towards the end of the week. So I do believe that investors, the caution is warranted that investors are displaying at this point.
As you touched on there, we're anticipating Eurozone's revised third quarter GDP data to be released this afternoon. But overall, what are your expectations out of that ECB meeting later this week on Thursday? To be exact, expectations are for a rate cut to come through, and in addition, additional support to banks in the form of a softening of collateral rules, and then more and longer liquidity operations as well.
Well, we are more or less in line with that. We are expecting a 25 basis points cut. But what's more important at this point is what's going to come out of the EU summit, and whether those concerns and rather those policies and resolutions are really turned into actions. We are seeing comments from France and Germany of a package of measures that's coming through as well. But we really need to see that turn into actions, as I mentioned earlier, to try and see whether we are going to rescue the Eurozone. So it's really, I mean, if we do see those collateral measures come through and the cut come through, we could obviously see some strengthening of the currency come through. But what is important is sentiment going forward, and whether we could see the Eurozone being rescued.
Sentiment and confidence levels have really been the big driving forces, up to now. In the past 2 years, though, the rand has posted its strongest levels in the last quarter, and that partly because of the decreased number of importers in the market towards the end of the year. Shireen, to what extent do you see that as a factor offsetting some of the risk-averse trading linked to the uncertainty that's playing out right now?
Indeed, it is a big factor, but as you mentioned, the rand has been wedded to the international sentiment, and if that sours towards the end of the year, we could see weakening in the currency. But generally, the rand has been seasonally stronger in December on the back of the fact that importers are slowing down and exporters are repatriating their funds. So we are expecting to see some kind of appreciation of the rand coming through towards the end of the year. And if we do see a breach of 8 rand to the downside, we could possibly see a move towards 770, 775 by year end.